Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Dramatic escalation. U.S. futures and the dollar fall after Jerome Powell says the Fed has been served with grand jury subpoenas related to renovations at the central bank's headquarters. Hundreds of thousands take to the streets as protests across Iran enter a third week. We'll bring you the latest and discuss the future of the Islamic Republic. Plus, President Trump says the U.S. will have Greenland one way or another. Well, it's just gone 9 a.m. across the Emirates, 5 a.m. over here in the UK. I'm Jemana Bersachi in London today, getting you up to speed on how markets are reacting to the deluge of news that has hit over the course of the last 48 hours, keeping a very close eye on what has been happening, the unrest, the revolution that is going on in Iran right now, and the reaction from authorities and also internationally. So we're going to speak about that on the show. In addition to the latest news being that the Fed Chair Jerome Powell has actually announced that they have been served with a subpoena by the Department of Justice over the Fed renovations that they announced last summer. So all of that has gone down. The reaction in the market is not so positive, as you can see. We're seeing a decline in S&P futures, down 0.6%, so pullback from all-time record highs that we reached last week. The USD also dipping this morning as well. So all of this policy uncertainty in the U.S., not a good thing for the greenback. Brent also climbing this morning, keeping close eye on everything that's happening in Iran. Obviously, last week, at the beginning of last week, we were focused on Venezuela, but by the end of the week, we saw Brent climb more than 6% between Thursday and Friday because of what's been happening in Iran and the potential for a supply cutoff there. And then gold, take a look, up at 4,567, another all-time record high, up 1.3%. Also not shown here, silver, too, is up 4% this morning as money goes into some of those safe havens. Switching over very quickly, I just want to show you the terminal chart that I've chosen today, and the fact that the market, the oil market, really is accounting for a bet on a regime change in 2026. That's polymarket odds sitting at around 60%. And on the back of that, as I mentioned, you saw a huge jump in the price of oil and where it's trading last week as well. So that geopolitical premium is being priced in to WTI and to Brent. But let's move back to the other big story overnight. Fed Chair Jerome Powell says the U.S. Central Bank has been served grand jury subpoenas from the Justice Department, threatening a criminal indictment, a dramatic escalation of the Trump administration's attacks on the Fed.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
For more, let's bring in our news desk managing editor, Jill Deesis. Jill, and I want to recap that phrase that we just heard from Powell now, saying this is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. What he's saying, the subtext of this is these subpoenas are not necessarily about renovations, but about political pressure.
Yes, Jemana, I mean, really hard to understate this here, but I mean, that statement that you just played from Jay Powell and these entire developments, really just a remarkably dramatic escalation of what has been an ongoing sort of battle between the Trump administration, Donald Trump himself, and the chairman of the Federal Reserve. I mean, you know, we've heard for months, years at this point about, you know, how dissatisfied Trump is with the pace of interest rate decisions the Fed is ultimately making here. And I mean, you know, this does kind of indicate, I mean, if there's a threat of a criminal indictment here, just how dramatic this ultimately gets. What you're seeing on screen right now is actually some footage from another really remarkable exchange between Jay Powell and Donald Trump last summer, revolving around some of those building renovations that have been talked about here. I mean, this is essentially Trump using the building renovations issue, saying that the Fed has really overrun their budget on some of those developments, is you know, part of that justification for why you know, there's there's a bit of a probe into the Federal Reserve. Obviously, how much of that ultimately is up to political concerns. I think that's the argument that you're hearing Jay Powell make here, is that this isn't about building renovations. This is about Fed independence. And so I think that's really kind of what you're seeing seize on there. And I think, again, just extraordinary that the chairman of the Fed is coming out and saying this. He really only has a few more months left in his position as chair, although his position on the FOMC runs significantly longer. Whether he actually stays after he steps down from the chairmanship, I think is still an open question there. But again, does just speak to how much things are really seriously ramping up when you've got Donald Trump that obviously wants the Federal Reserve to sort of follow his own demands.
Jill, thank you so much. Jill Desis, Bloomberg's news desk managing editor, breaking down a major story that has broken in the last 24 hours. And Senator Elisabeth Warren, the ranking member on the Senate Banking Committee, will join Bloomberg's Balance of Power later today. Well, that's at 2 a.m. tomorrow for early risers in Dubai, 5 p.m. Monday for those in New York. And for more insights on how markets are reacting to threats of a criminal indictment at the Fed, Aarthi Chandrasekaran, head of public markets at Shuaa Capital, is with us. Aarthi, quite simply, your thoughts on the latest that is going down with the Fed and the real threat right now of Fed independence.
It's unprecedented, and I think the administration is crossing a very dangerous line in terms of institutional trust. I mean, once you start questioning the Fed on the independence, the credibility runs out of the window. It erodes completely fast. And the market will start pricing in politics and not policies. Negative for risk assets in general, Joanna.
Yeah. And how do you think, I mean, right now what we're seeing is a bit of a pullback for equities, a bit of a pullback for the greenback as well. This policy uncertainty, how much of a headwind do you think will pose to financial markets in the coming months?
I think this is one of the major risks that I see for 2026, right? Because you have a Fed transition, and we all know what the intent of the new Fed chair would be, which is they do have a very dovish tilt on the markets. And this is exactly coming around the same time when the administration is doing everything it can do to boost the disposable income with the households. We have seen tons of news over the weekend on the purchase of the MBS, bringing down the mortgage rates, capping the interest rates, the fiscal impulse that's going to be into the economy, the big and the beautiful bill, the $2,000 of handovers, you name it. So you have. I think the Fed easing policy is going to collide with the fiscal expansion policy, and that's going to be very, very tricky to handle for the market, because if you see a resurge in inflation, I'm not sure which way the Fed would go, because would they actually brush the inflation research under the carpet, and would they just say that inflation is transitory and they are still going to go with the mandate? So that's going to be very tricky for the market, and that is when a cut will not be cheered by the market. A cut will be a cause of a concern.
Okay, so how do you position for that scenario, Aarthi? What is the best way to position for a resurgence in inflation this year?
We've been expecting a curve to steeper, Jumana. I mean, if you just take a step back and think about it, in this particular Fed easing cycle, the Fed has cut 175 basis points so far, right? But the 10 years is still higher than where it was before the Fed started cutting. That basically tells you the amount of term premium that is embedded in the market today. And I think it's just going to go up. If you have an inflation resurgence, and if Fed is not likely to do anything about it, your 10 years could go to 4.5 or 4.6, and that's what we are positioned for, steeper yield curves for 2026.
What about the greenback? Towards the end of the year last year, we saw the dollar stabilize, and perhaps there was almost too much talk about de-dollarization in the first half of the year. How do you think that manifests in 2026, if indeed we have the uncertainty around the Fed once again and that possible resurgence of inflation?
Yeah, I think initially the dollar will be still a bit resilient compared to with respect to the emerging market currencies, mainly because the dollar shorts are extremely stretched at this point of time, and Fed is unlikely to do anything over the next one or two meetings, given inflation so far is benign and so far the job market has not weakened enough. So I think it might be positive for dollar to some extent to start of the year. But then as the year goes on, as we muddle through the year, we do expect that given that inflation is going to come back and if Fed independence is questioned and if politics is going to play a larger role than policies, then it's going to be very detrimental to the dollar.
Yeah, and another question that I need to bring up as well on the topic of inflation, we have started to see oil get priced in for further geopolitical premium, especially with what's happening on the ground in Iran. Very difficult to ascertain at this point how it's all going to play out. That's our next segment on the show. But how do you see oil also influencing inflation expectations this year if, for whatever reason, you do get a massive shock upwards in the price of oil?
Yeah, that's something which we have to be very mindful of as well. It's a challenge to see, to know, I mean, to basically predict which way the oil would go from a political angle, Jumana, because it's so harder to predict and it's so harder to quantify as well. But even from a fundamental point of view, just keeping everything else outside oil, I mean, there is a downside risk to oil because of the oversupplied market in general. At least you have a $3 or $4 geopolitical risk premium that's embedded in oil as of today. And if things really go south with respect to geopolitics, then that's another pressure that's going to be embedded into the inflation and onto the consumer household.
Aarthi Chandrasekaran, Head of Public Markets at Shuaa Capital. Always good to talk to you. Thank you for coming on what has been quite an eventful weekend for markets. Well, coming up, we speak to Alan Eyre, a former senior U.S. diplomat and distinguished diplomatic fellow at the Middle East Institute, on what the growing protests in Iran mean for the regime. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in London today. President Donald Trump says the U.S. is looking at potential options in response to reports of deadly crackdowns in Iran. Trump also said Iran's leadership has reached out to seek talks and a meeting is being set up, but the U.S. may have to act before the meeting.
We're looking at it very seriously. The military is looking at it, and we're looking at some very strong options. We'll make a determination.
With us now, Alan Eyre, former senior U.S. diplomat and distinguished diplomatic fellow at the Middle East Institute. So much to discuss here. First, let me just start off by asking you, the demonstrations, the uprising that we are witnessing in Iran, less and less information is coming through over the last couple of days because there's a blackout, essentially, in terms of information dissemination. But ultimately, how much of a threat do you think this uprising actually is to the Iranian regime right now?
I think it's an existential threat. It's a big threat. I think it's one of the biggest. I mean, as we all know, they've had demonstrations many times throughout their life, but especially in the last 5 or 6 or 10 years. But in terms of the numbers, and in terms of the violence, and in terms of just the lack of a toolkit that the Islamic Republic has to deal with it, because discontent and anger is so widespread. I mean, certainly the regime is taking this as an existential threat, which is why, as you've pointed out, they've cut the internet, they've cut communications with the outside world, and they're using a lot of violence.
Could you get a situation like what happened in Egypt, where the military actually turns on the regime? Essentially, how much influence does the Iranian regime still have on its own security forces?
That is a great question, Jamada, because that's one of the key variables. One of the variables is, how much longer protesters' anger and despair regarding the regime is greater than their fear of the regime. And on the other side, with the people who are trying to suppress it, how long the elites maintain this cohesion, how long the security forces in the streets are willing to fire at their fellow Iranians to try to put down the regime. Up until now, among the elites, we've seen elite cohesion. We haven't seen defections. We haven't seen factions within the IRGC, the Islamic Revolutionary Guard Corps, try to distance themselves from the regime. So at the elite levels, the regime has sort of got their backs to the water on the beach, and they're sticking together.
For now. How could a U.S. strike change things. And again, over the course of the weekend, I've been reading a lot of distinction between what people are calling a kinetic strike versus a non-kinetic strike. Kinetic strike obviously being a more military option, non-kinetic being things related to cyber or not a direct military strike coming through from the U.S. How could that influence the course of action, do you think?
Yeah, that's a huge wild card. I mean, if you're in terms of a kinetic strike, if the U.S. takes military action on Iran, on the one hand, that could show the protesters that the U.S. is with them and increase their fervor or maintain their willingness to go out on the street. On the other hand, for many at least, including some people sitting on the fence, it could reinforce the propaganda line that the regime is putting out now, that the protesters are driven by the Israelis and by the U.S., that they're terrorists being funded by the West. And so it, in that sense, could also cause some protesters to be less willing to demonstrate. Also, don't forget that the Iranian government has repeatedly threatened military action if the U.S. does military action on its own. So far, these protests haven't had regional repercussions. But if there are military strikes against Iran, it could well be the case that Iran, feeling this existential threat, decides to retaliate against U.S. forces in the region, and then it becomes a regional problem.
You know, there's this piece of advice that people often attribute to Bonaparte, which is never interrupt your enemy when he is making a mistake. And the reason I bring this up is I do wonder whether if there is, say, a U.S. military strike or even an Israeli strike, and you see a flaring up of conflict once again between Iran and Israel, whether that actually might have the inadvertent side effect of having the people rally around the flag, which is what you saw temporarily in the summer last year. Is that perhaps a catalyst for, or a reason for both Israel and the U.S. to perhaps sit back and see how this unfolds, as opposed to getting more directly involved?
You're exactly right, and that's an incredibly appropriate quote. There's an American biologist named Garrett Hardin who said, you could never do just one thing with complex systems. What's going on in Iran right now is a complex system. And as you said, a U.S. military strike could very well have unintended consequences. And so, President Trump right now could well be thinking, everything's going our way in Iran. Every day the Iranian regime gets weaker. The people are doing all the heavy lifting. There's no need for a U.S. kinetic strike. Let's just see where this takes us. So it could well be the case that he does not want to interfere as long as the current dynamics continue.
Okay, what about Iran's proxies around the region? No, you've had broader regional developments that have occurred in the last 12 months. You've got the removal of the Assad regime. You have the weakening of Hezbollah, the weakening of Hamas. Again, the Houthis are still quite active, but with what is happening in Iran now and the Iranian regime presumably on the back foot, what does that imply for the proxies in the region as well?
No, I think they're on their own. Iran has got serious domestic problems. You know, one of the results of the 12-day war was that it weakened all the pillars of Iranian strategic deterrence, the proxies, the nuclear program, and its missile program. So, and part of the problem was that they wanted to reconstitute that, and for example, their most recent budget is spending a disproportionate amount on military and security forces. This is what set off this flame, was the fact that the Iranian economy is crashing, that the exchange rate has gone berserk. So economic inability of the Iranian regime started this, but it spread to a more widespread protest. So yeah, the proxy network, I think right now Iran is too busy putting out this domestic fire to try and replenish, revitalize its proxy network.
Always good to talk to you. Alan Eyre, former senior U.S. diplomat and distinguished diplomatic fellow at the Middle East Institute. Thank you so much for coming on. Well, coming up, and now, South Africa risks angering Donald Trump by hosting naval drills alongside vessels from China, Russia, and Iran. We'll bring you that story next. This is Bloomberg. Warships from Iran and Russia joined naval drills off the coast of Cape Town alongside vessels from China, South Africa, and the UAE. The exercise risks a further deterioration in relations between South Africa and the U.S., which has criticized Pretoria's close ties with Iran, Russia, and China. Our chief Africa correspondent, Jennifer Zabazajja, joins us now. Well, this is quite the timing to be conducting these drills, Jen, especially with the countries in question. How much could this complicate South Africa's already strained relationship with the U.S.?
Right, Giovanna, I think if you look at the timing, which is really critical in this, it's quite significant. This is hardly the first time we've seen South Africa participate in naval exercises of this matter and with some of its allies. But exactly as you mentioned, the timing is what many critics are pointing to. And also the expanded participants is really getting a lot of focus here. We, of course, mentioned there are quite a lot of multinationals that are participating in this, many of which are drawing the ire of the U.S. president. And so a lot of the criticism is stemming from the fact that why, in fact, would South Africa, as they have continued to put out the fact that they do have this non-aligned stance, why would they conduct these exercises? Though, if you do look at what we've actually heard from this grouping, they have said that this is dubbed the Will for Peace, as you were mentioning, and it's meant to focus on maritime security and safe navigation. We've seen previous iterations with a smaller grouping, South Africa, China, and Russia, of course, the original BRICS members. But now, of course, we have BRICS Plus. And so a number of these countries that are involved, it is looking like, at least the optics of this look like they are seeming to try to counter somewhat of Western influence. But still, it is important to note the timing because we, of course, have seen disruption and tensions in the Middle East. There's, of course, been trade disruptions. And so many ships are actually diverting away through South Africa and the Cape Coast. And so there really are a number of people who are looking at this and wondering just what exactly South Africa and these groupings of nations are trying to put out.
Also caught my attention that Iran are participating this time around, which feels quite unusual.
Right, exactly, Jumana. And as you point out there, we actually have some reporting from News 24, which is one of the local papers in South Africa, which actually reported the fact that South Africa was trying to convince Iran to be an observer status, which we are seeing some of these nations that are participating in these exercises becoming observer status. Iran, not so much. So again, as you were just speaking to your guests there, the considerations of what Iran is facing on the ground there, why in fact did they decide to participate in this, and what is the calculation behind South Africa asking the nation to be a part of this?
Jen, thanks so much. Jennifer Zabazajja, our chief Africa correspondent. Coming up, we're going to talk about Middle East venture capital funding. We'll be right back. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Dramatic escalation. U.S. futures and the dollar fall after Jerome Powell says the Fed has been served with grand jury subpoenas related to renovations at the central bank's headquarters. Hundreds of thousands take to the streets as protests across Iran enter third week. We'll bring you the latest and discuss the future of the Islamic Republic. Plus, President Trump says the U.S. will have Greenland one way or another. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. in the UK. I'm Giovanna Bersecci in London today. Well, lots of news that we've been talking through in the first half of this show. For markets, a lot of attention being paid to the subpoena that's been handed to the Fed by the Department of Justice over their alleged renovations last summer. So this is a major story that broke just in the last 24 hours. Not good news for markets. And you can see U.S. futures are dipping on the back of it, down 0.6%. Pulling back from those all-time record highs. The USD also slipping, greenback down about 0.8%. So other majors gaining ground versus the USD this morning. Again, policy uncertainty, questions about the path forward for the Fed. And of course, we're entering into the last few months of Fed Chair Jerome Powell's term. But what happens afterwards? Big question mark. And earlier on, we were speaking to a guest who was getting increasingly concerned about the possibility of a resurgence in inflation. So perhaps that is a new narrative that the market is going to start thinking about in the coming weeks. Brent also very much in focus, keeping a close eye on what's been happening in Iran, the uprising there, how serious of a challenge it's posing to the regime. Less and less information is coming through because of the blackout, but essentially we've seen a massive spike up in Brent. $63.50 is where we're at, 0.2% firmer today, but we were up 6% over the course of the end of the week last week. So a big spike upwards in geopolitical premium there. And then money this morning is going into gold and silver. Gold up 1.4%, silver up 4%. The safe havens doing well with all of the uncertainties in the world. What a start to 2026 it has been. Switching over, I also just want to show you Polymarket odds, a 60% chance of regime change in Iran. And you can see that that's also impacting where oil is trading. I just spoke about that and the fact that more geopolitical premium is being priced in. At one point last week, Brent was trading through 60 to the downside, but now we're getting close to $64 again as the market squares its attention on developments in Iran and the real potential for supply disruption there. Okay, let's also check in on how markets in Asia are faring this morning. Winnie Su is in our Hong Kong studio. Winnie, walk us through it.
Morning, Jomana. It's actually quite interesting to see how Asian stocks and U.S. futures are moving in different directions. And that's probably also being driven by how the concerns around Fed independence is kind of driving flows away from U.S. assets and into regions like Asia. Now, leading gains today here are stocks in South Korea and Taiwan. Worth noting that Kospi has actually been extending gains for 7 days already and is now the best performing stock, the best performing benchmark in the global equities market so far this year. However, it's very hard to look away from that weakness in the Japanese yen as it's been extending losses for a fifth session and now to a one-year low around 158 against the dollar here. Now we've got local media saying that Prime Minister Takaichi is now considering a snap election, which is rekindling some concerns around her fiscal budget. Now flip the board and take a look at what sector is leading gains in our region today, and that's the tech sector with Alibaba and Meituan driving, and that's coming after Chinese regulators launch a probe into these price competition among these online food delivery companies in China. Analysts are saying that they are expecting this to drive an end to this price competition that has been hurting profits for these companies. Back to you, Jomana.
Yep, Japan story, obviously one that we're watching very closely. Closed for a holiday today, but again, real prospect of a snap election there. Winnie Su in Hong Kong, thank you so much. Well, HSBC's asset management arm has been given the green light to open a branch in the UAE. The bank will kick off with 10 onshore funds as it looks to tap one of the world's fastest growing wealth markets. HSBC is pivoting to Asia and the Middle East, even as it exits businesses in the West under the CEO, Georges El-Hedri, and his overhaul.
We are the first one amongst all the global asset managers to obtain a license from the local regulator, Securities and Commodities Authority, to provide investment and portfolio management services. So we are now setting up a UAE branch based in Dubai and offering a range of onshore funds.
And speaking of the region, the Middle East and North Africa region is emerging as a global hub for venture capital as investment hits record $3.8 billion in 2025. That's according to MAGNiTT, a private capital data platform for emerging venture markets. It says strong GCC performance and rising international investor participation underpin the region's record year. Joining us now is Phil Bahoshy, founder and CEO of MAGNiTT. Philip, good morning to you. So you track data across not just the Middle East region, but across emerging markets as a whole. And I think what stands out to me from your report from 2025 is that in general, it had not been a great year for deal making, but it was in the Middle East.
Absolutely. Thank you for having me. So across the emerging venture markets that we cover of Africa, the Middle East and Southeast Asia, there's almost two different stories. Southeast Asia has seen somewhat of a slowdown over the last 4 to 5 years. Africa has been somewhat muted, but the GCC specifically has seen a pickup in deal activity over the last 12 months. And that can be driven by some of the geopolitical activity. We saw President Trump did it. internationally. First one was to the GCC, but also the investment capital that's being deployed here in the region. And it's really becoming a magnet for capital globally, attracting international and local participation, which is extremely positive for the private capital space.
How does 2025 deal making compare to prior years for the region? Is the trend still upwards?
Yes, I think it was really driven that the whole funnel of investment has continued to grow. So we saw the return of what we call mega deal investments, those that are $100 million plus. But we also saw the underlying ecosystem, Series A, Series B investment deals continuing to grow. And in fact, between Q1 and Q3, there were 3 consecutive quarters of investment growth. At the same time, we continue to see investors coming to the region. We now see close to 50% of all the capital coming from investors that are coming from outside of the region, as well as close to 54% of the total number of investors coming from outside of the region, which is also an interesting sign of maturity.
Yeah, and one other thing that caught my attention is Saudi Arabia was the most active country by funding. And here you've got to draw a distinction between the price action on the public markets, with the Tadawul ending the year down something like 12-13%, versus a real amount, a good amount of activity taking place on the private side. How can that be? How can you have public markets underperforming, but a good, healthy amount of activity taking place in private? Okay. We have briefly lost Phil, but we will come back to him. I'm curious to hear his response to that, the question about Saudi Arabia. Phil, I'm going to repeat my question to you. Saudi Arabia, Tadawul index ended the year last year down 12-13%. But in your report, you talk about Saudi Arabia being the most active country from a deal-making perspective. How do you square the two up?
Yeah, so I think in the private capital space, there's been a lot of sovereign focus on the investment space. This has been largely driven by fund-to-fund structures. His Excellency, the Minister of MCIT, has been really driving investment capital, not just within the kingdom, but also outwards. I think in the public market space, we've seen some change in regulation now, with the CMA accepting international participation into the kingdom. And I think one of the challenges of the Saudi ecosystem, not only from a public perspective, but the private markets, is the impact of oil. And clearly it's very heavily driven by oil price, which has seen declines in the last 2 years. But I do think that in the private capital space, we are likely to see continued growth in both early stage and late stage investment. And heading into 2026, likely to see even the liquidity and some of the listings begin to come and transpire in the kingdom itself.
Yeah, would you say it's necessary to see more of those listings and the IPOs in order to continue with this momentum of funding in the region?
I think as a region that's now entering almost its second decade of venture capital investment, liquidity is probably the biggest orange flag, shall we call it, for the region. We want to see that flywheel effect of liquidity, both for founders, investors, and governments that have invested in this ecosystem. The last couple of years have been somewhat challenging, but M&A activity, one source of exits, has picked up this year compared to years gone by. We've seen, I think, 1 or 2 listings last year, but as the IPO window globally begins to pick up and as interest rates come down, it's very likely that we'll continue to see this path towards more liquidity in the wider market, which is extremely important for investors.
And let me round up by asking you, last year was a huge year for anything AI related. How has that thematic played out in the region as well? What opportunities did that present for the GCC region too?
Yeah, I think we're very much catching up with what's happening from an AI perspective. MAGNiTT's been tracking this for 12 months, and we saw close to $800 million of investment, the highest level, and in fact 3 times the amount of capital that was deployed last year in AI. And this is in all of the different segments of the market. But you've also seen from a government perspective, whether it's in Saudi Arabia, the UAE, or other GCC geographies, not only is it software production, but it's also in hardware, cloud, infrastructure. So I think AI is going to be a big thematic heading into 2026 and beyond, not just for the tech space, but the wider infrastructure of the region.
Philip, always good to chat to you. Philip Bahoshy, MAGNiTT founder and CEO. Thanks so much. Well, coming up, the Dubai Financial Services Authority tightens its crypto rules, aiming to boost market integrity while supporting innovation. We'll speak to Elisabeth Wallace, DFSA's Associate Director of Policy and Legal. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in London today. Dubai's financial regulator is rolling out major updates to its crypto token regulatory framework, tightening safeguards to support a safe, transparent, and well-regulated digital asset environment. The changes aim to strengthen market integrity while continuing to support innovation in the crypto space. Joining me now is Elisabeth Wallace, Associate Director of Policy and Legal at the Dubai Financial Services Authority. I mean, the main change that I see here is that you're putting the onus on firms now to determine if tokens are suitable instead of the regulator. Talk us through why the DFSA made this decision, Elisabeth, and good morning to you.
Thank you, and good morning to you, Jumana. So we made the decision to change our approach for three main reasons. One was further alignment with international standard setters. Another was further alignment with international regulatory standards. Given there are many international firms in the DFSA, we wanted to have that alignment. And I think most importantly, it was in response to market feedback and market evolution. The market first started around 2008 with the Bitcoin white paper, and we've seen quite a few changes since then. So we have been monitoring that development, and we wanted to keep up to speed with it.
Yeah, and just, coming back to the onus now being on the firms as opposed to the regulators, does this safeguard the interest of consumers, do you think, or does it put consumers at more risk?
Okay, great question. So you're right. We are now placing the responsibility on firms to make the decision. They've got to do so in terms of looking at the nature, scale, and complexity of their business, importantly, the type of customers they serve, and their ability to comply with our regulations. But we still have significant oversight. And that is done both at a licensing stage, where we look at the firms, we look at their systems and controls and ability to meet our requirements, and then on an ongoing basis, where we supervise their activity. We also, in association with that, will receive monthly reports, and we talk to our firms quite a lot to talk about their conduct and the feedback that we might be getting back from the market.
Do you expect this measure to increase the number of tokens that are being traded on these DFSA-approved venues?
I think we will see an increase in the number of tokens being assessed as suitable. But as I've said, it will be looking at the types of products and services that they want to offer. To give you a real-life example, we might see a fund manager putting more tokens into a fund, but we might see an exchange being slightly more cautious given the direct retail access that they provide. So really it will be up to the firms to make this decision, and then we'll appropriately supervise what they've been doing.
What is your read on the volume of tokens in the markets and whether it's actually beneficial for there to be more options for consumers?
Okay, great question. So what you actually should be looking at, and what customers will often look at, is the market capitalization of the crypto tokens. That's the volume, that's the trading, that's the liquidity of those. And you'll find more customers will look to buy the larger crypto tokens with the higher market capitalization. However, you will find there'll be customers that want to invest in more niche crypto tokens, wanting them to raise in value. So I think it really depends on what customers want and what the outcomes they're seeking to achieve.
Yeah, and how do these new measures stack up versus other jurisdictions? And again, we talk a lot about all of the measures that the UAE is putting in place to encourage a healthy trading environment for cryptocurrencies. How does the latest measure vis-a-vis the regulation and supervision of tokens compare to other jurisdictions around the world?
Okay, so I think, like I've mentioned before, we've seen Bitcoin come into effect in 2008. This is still a relatively nascent market. We have aligned ourselves with other large international jurisdictions such as Hong Kong, such as Singapore, such as Europe. But we're still seeing markets bringing regulation to the market at the moment. We've seen the US has come out with the Genius Act, but we're still waiting for regulations. And we've seen the UK consult on its regulatory approach, but we're still waiting for the final deliberations there. So I think we've aligned ourselves with other comparable jurisdictions, but we are still seeing jurisdictions develop regulatory frameworks in this area.
And how have volumes actually progressed in this part of the world over the last couple of years? We talk about, again, the UAE being a growing hub for cryptocurrency trading. What are you actually seeing on the ground?
Okay, so I'll speak on what we're seeing in the DIFC. I think we're seeing a market that is still evolving. The volumes have not been large, but we are seeing them growing. And I think we will see that happen more in 2026 in response to the changes that we've made to our framework.
Okay, Elisabeth Wallace, Associate Director of Policy and Legal at DFSA. Thank you so much for coming on and talking to us about some of the latest changes introduced. Now, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, Iran's president is vowing to listen to protesters' demands, but would that be enough to quell growing anger? We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in London today. Demonstrations in Iran have been growing day after day, with hundreds of thousands of people defying authorities' threats and a brutal crackdown to take to the streets. Iran's president is now moving to calm protesters, describing their demands as legitimate.
I acknowledge the concerns of our dear people, perhaps 80 or 90% of them, and I firmly assure them that we are making every effort to resolve these concerns. We will get through this crisis.
Let's go to Dubai now and speak to Anur An, Bloomberg's managing editor for Middle East and North Africa. Anur, interesting comments coming through from the president there. I mean, is there any signs at all that things might de-escalate from here,
Well, Iranian President Masoud Pezeshkian's comments reflect the dilemma that his administration is facing. Yes, on the one hand, the protests, which have been very deadly, according to US-based activists, over 500 people have been killed in the protests that are entering their third week. On the other hand, we have seen that there is a dilemma facing the Iranian administration, and it's the fact that the toolkit or the options that they have to address the discontent that the protesters have been expressing is quite limited. These protests began because of an economic decline that expressed itself especially in the devaluation of the currency, which is feeding into inflation and basically eating Iranian people's purchasing power. And there is very limited amount of room that Iranian administration can take to really address those concerns. So given that fact, we've seen that the Iranian president and other Iranian authorities have been somewhat conciliatory over the past couple of days. But as I said, there is very limited room for maneuver for them to really go to the heart of the discontent and, as you said, pursue a path of de-escalation.
Yeah, and you're seeing it manifest in the geopolitical premium that's being priced into oil this morning. Anur An, Bloomberg's managing editor for Middle East and North Africa. Thank you so much. Now for a look at some of the other stories we're following. The UK and Germany are leading a European push to discuss plans to increase a military presence in Greenland to show President Donald Trump the continent is serious about Arctic security. The move comes amid heightened rhetoric from the US president about taking control of Greenland.
If we don't take Greenland, Russia or China will take Greenland, and I am not going to let that happen. Sure, I'd love to make a deal with them. It's easier. But one way or the other, we're going to have Greenland.
President Trump says he is leaning towards excluding Exxon from efforts to rebuild Venezuela's petroleum industry. Trump expressed dissatisfaction with the CEO, Darren Woods, who described Venezuela as, quote, uninvestable during a White House meeting. The president's latest remarks also highlight the challenge of persuading the U.S. oil companies to commit to an ambitious reconstruction of Venezuela's once mighty energy sector. Okay, let's round out the show taking a look at how futures are trading, because we're keeping a close eye on the geopolitics, but also the latest with the Fed and the Fed chair announcing that a subpoena has been sent to them by the Department of Justice over the renovations that the Fed have been conducting around their building. That was a big story towards the summer and the end of the summer last year. And obviously it's taken one step further now with this subpoena coming through from the Department of Justice. Markets not taking it well. S&P futures down 0.6%. Take a look at NASDAQ, also down almost 1% in trading. Do not like the fact that there's been another shot fired at the Fed and the Fed's independence. European markets, though, relatively outperforming today. And of course, this tells you that this is mainly a U.S. story and U.S. Fed-related story. But let's switch over, because I also just want to point out the price action and some of the standard safe havens. So take a look here. Gold this morning reaching another all-time record high, up 1.6%, just shy of 4,600 here. Silver, once again, back up at $84. That squeeze, that melt up that we have seen the last month continues. Today up 5.6%. And again, it does tell you in times of geopolitical uncertainty vis-a-vis Venezuela, vis-a-vis Iran, money is going to go into those safe havens, gold and silver included. And then Brent, of course, continues its upward march, up 0.2%. Last week, towards the end of the week, we jumped 6% in 2 days. Keep a close eye on the developments in Iran. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in London. Daybreak Europe is next.